Welcome back, and you're still watching Business Live. So over the past 12 months, 7 banks have failed. Then we saw the consolidation of 5 of them, now known as the Consolidated Bank Ghana. The story didn't end there. A move described by the central bank as reforms in the financial sector has actually degenerated into something really different: panic withdrawals, with many describing the situation as crisis. But Governor of the Bank of Ghana, Dr. Ernest Addison, says we are not in crisis. In fact, he actually says 7 failed banks held only 10% of the banking industry's assets, and that their collapse does not mean there's crisis. But what does a crisis in the banking sector means, and what will agree with the governor's assertion? Philip Namfree of Joy Business is here for more on this very topic. Thanks so much for joining me. First of all, are we in crisis or we are not?
Well, that's very hard to define. If you're following the governor's arguments, from a technical point of view, he's looking at the numbers and he's saying that these 7 banks that have gone down held only 10% of the assets. It will surprise you to know that in 1980, in Ghana's very banking sector, 4 banks held 70% of the banking sector assets. So imagine those 4 banks where
10%
went down. That was 70% in the 80s. Okay. Now just 7 of them hold 10% of the assets. So if you look at it from the governor's arguments, yes, you might say that we are not in crisis, but you have to examine other parts of it. So I'm here to present crisis versus...
Yes, I want to know the indicators that will actually tell you whether we are in crisis or we are not.
Okay.
So we put a beautiful graphics together to show that, right?
Yes, we did.
All right.
And just to go over that quickly, if you look at something called the financial soundness indicators, okay, so these are the arguments of the government, and he's saying that because 7 banks held only 10% of the assets, we're not in a crisis. And we know that last year we had the UT Bank Capital Bank through the purchase and assumption agreement. GCB Bank took over their assets and liabilities. So that was 2 banks. Then this year we had the 5 banks: Beige Bank, Royal Bank, Sovereign Bank, Construction Bank, and the Royal Bank. But it will interest you to know that in the governor's submissions, as captured by the BNFT, he says Sovereign Bank and Construction Bank, their level of financial intermediation was not very high.
What does that mean?
They hadn't been in existence for long.
Okay.
So how they were playing in the banking industry was not as high as the other banks which have been there for years, where savings and loans and, had moved into other areas of the financial scope. So if you look at it on the surface, yes. Then there was also the Bank of Ghana's continuous reassuring, if I can put it that way. Yes, that our deposits are safe and there's something for us to see, promoting a safe banking system in Ghana. Then they described a plethora of actions they had taken to keep the banking sector in check. That was somewhere in April to May of this year. Then they came out with a raft of directives, corporate governance directive, fit and proper directives, and a whole range of things. So yes, 1 year down the line, you can say that we've had challenges. The regulator has assured us that no, this is not a crisis. If you even read stuff from the World Bank, they describe it as they describe what they call systemic banking crisis, where all banks are insolvent and illiquid.
But there's still crisis attached to it, whether it's systemic or not.
There's still crisis attached to it. Okay. So if we can move to the other slide that discusses crisis versus not crisis, we can get some more light from there.
So what actually are the indicators that you see that okay, this is crisis, this is not crisis? You spoke about.
If I look at the banking sector report, they have what you call financial soundness indicators. So you look at liquidity ratios, you look at solvency ratios, and you look at profitability, your net income. And the last or most recent banking sector report put everything at generally good. So from the surface of it, there's no crisis if you follow the numbers.
But Philip, you agree with me that people are panicking. They are going to the banks, they are taking their monies, and there's this assurance, but banks, and it's spread to even the microfinance sector. So can we still say that we don't have crisis?
And that's the other part of the conversation we need to explore. In books, financial literature, technical literature, if you look at it on the surface, if only 7 banks hold 10%, that's not a problem. But people are concerned about how it will spread to other areas. How now businesses are pulling back. Even some say sponsors are pulling back from events. People are doing this just because you might not know what's going to happen to your bank tomorrow morning. And it's going to spread some amount of fear and panic.
All right, Philip, finally, let's talk about the road to recovery. How do we recover from this?
Okay, well, it's going to take a multi-dimensional approach. We have the regulator on one side, we have the banks themselves, the financial institutions, we have the customers, you and I, and everything. So we all have to come together, and everybody must be on the same page, in the same book, in the same library, on the same shelf, as to exactly how the sector is going to move forward.
All right, thank you so much. It's still a debate as to whether we are actually experiencing some form of crisis in the banking sector or not.